same time, if you wanted to go after hours to buy a chocolate, you'd go to your corner cafe. There were two things intersected. There was a massive evolution in the late 90s of convenience retail, convenience stores in gas stations, supermarkets. The corner cafe went the way of the quick shop.
Right.
And there was a massive pent-up retail demand that merchants wanted to provide ATMs for their clients. So ordinarily, they'd have to go to their banks, and they were dependent on their bank to provide an ATM machine. We saw the back of that. We looked at the market. We saw what worked elsewhere, and that was particularly in the US. And we said, if you're a merchant and you want an ATM in your shop, you shouldn't have a dependency on the bank. And so we provided a service to shopkeepers who wanted to provide ATM services without having dependencies. We started a company called ATM Solutions, and that thing just went absolute gangbusters. And in pretty short order, we became the major provider of ATM and ATM services to convenience retail around the country. On the back of that, in pretty short order, we saw another problem emerged in the market, that there were many, many SMME merchants who had difficulty to accept card payments, also had reliance on the banks. So on the back of our retail relationships, on our payments processing, we then decided to go from being a reasonably competent, I suppose, ATM deployer into being a much more broad-based payments company. ATMs and POS and card, and that's the thing that we're looking to solve for.
Wow, incredible. Let's get to you, Dewald.
Yeah, I think our journey probably started a little bit differently in the sense that we were students, at the time, computer engineering students at Stellenbosch, and I remember one night, the engineers, we were the weird guys, right? So Stellenbosch University put the engineers kind of in the corner. And we wrote exams in different times than the rest of the campus. And so we walked to our student center one night, and there was a guy coming from the front. He couldn't walk. He was being carried by his friends because of a big night. And he said, look at you guys, you engineers, studying while we're out partying, and you're all going to work for me one day. And I said, no, it's not going to work for me. And so I said to the guys, how does it work that you're always, we end up as engineers, we work, for someone else. Why? We're smart people, why can't we figure it out? So we started coming together on Thursday nights and to brainstorm. And one night, one of my co-founders came in and he said, you know what, I was just at IT Web Security Summit, and there are all these banking clients, or these vendors selling these OTPs and these SMS OTP services to the banks. And yet my mom's bank account was cleaned out without her knowledge last week. How's that? And we thought, how is that? Why? I mean, it seems pretty secure. You get the code, right? It's usually unique for a transaction. Why is that? And so we realized, it was a man-in-the-middle attack. And we, that night, figured out, okay, if we had a clean slate, how would we design a system that would, solve that problem? And so we came up that night with what is today known as out-of-band authentication or push authentication. And then had the pleasure as 4 students to go and convince hardened banking security professionals that we knew better.
Yeah.
Which was a very, very tough ask. We didn't have any connections or anything like that. But we then eventually got a bank that saw the vision. There was a strategy head from Nedbank at the time, and he said, well, you guys, this is cool. And we rolled out with them and took their phishing fraud overnight to 0. Literally, there was nothing there. And so what happens with fraud is if you solve for it, it doesn't go away, it moves.
Yes.
And so when we put the electrical fence around Nedbank, the other banks started calling to say, okay, we need to get what you guys have got. And so that was the story. We started with a basic in-app kind of push or push USSD, which was also technology that we had to kind of invent in terms of a product set for this market. And yeah, the rest was history.
I'm probably going to make you think a little bit back here, and let me stay with you, Dewald, before I get to Stephen on this one. How long did it take till you were convinced, as the team talking, as the co-founders, that, okay, we're ready to sit in front of someone across the table and present what it is we have created?
So, we were students and very bold, at the time. So we weren't afraid of anything. So we probably did it way too quickly. So probably we came up with this on a Thursday night, And over that weekend, we built the first prototype. We pulled a couple of late nights and had the first prototype, and that next week we pitched it to the first prospect. So we went very quickly with that. Didn't have success, but we tried and tried again. I think that, but yeah, it was quite a quick process in terms of from idea to prototype.
And Stephen, for you, slightly related to him, but I'm curious about what the reception was in the early days as you are rolling this out.
We were fortunate at the time for our very first product, which we brought to market, which were in-store ATMs. We were fortunate that there was such a huge amount of pent-up retail demand already from service station owners and spa owners and quick shop owners who wanted ATM machines in their shops, that it didn't take a hell of a lot of convincing for them if you offered them a solution that they didn't have to, ring up their bank and wait 10 months for a consultant to come see them to decide whether they wanted a machine in their shop. So we found a very, very receptive market very, very quickly, and we had to make sure that the language that we sold it to them under was something that they understood. You've got a site, we've got a product, we want to put it there, you want it, how can we meet in the middle? And then as the business evolved from being beyond ATMs into point of sale and merchant acquiring and card issuing, we just found pockets of demand that were possibly being underserviced by the bigger banks, where perhaps they were doing a really good job in a vertical. We'd see that there'd be a demand in a particular area, and we always found that the level of convincing that we had to do, we were really pushing against an open door.
Okay. Let me stay with you for my next question. At what point did you realize that what you're providing is bigger than South Africa? What was the tipping point for you and the team that we can actually take this to other markets? And I'm going to ask the same thing of Dewald as well.
I mean, our eureka moment was more like a damp squib, to be honest. It was something that a light bulb came on in the bath. So we had this large and growing ATM business, and we had some merchants who were operating in Namibia. Now, in payments, Namibia might as well be on the moon. I mean, it's a different regulatory environment, different country, etc. And we figured out, if you fast forward even to today, we must have, 600 or 700 ATM machines operating in Namibia. We employ a branch manager, a few field service people, sales guy, a lady that answers the phone, literally maybe 7 or 8 people. And we managed to run a massive estate of ATM machines, very, very profitably. And we do cardless transactions, and we do the whole lot. And we do all the heavy lifting from South Africa, and was very profitable. So our eureka moment was like, why don't we find more markets that we can deploy relatively light infrastructure, and we can do all the heavy lifting from South Africa off a rand cost base? We thought that was scalable. So we sought out markets where our product set was appropriate, where we can deliver solutions and do everything from Joburg. And that's scalable, because quite frankly, no matter how diverse our offering was becoming here, we always thought that the real scale and the real value would be created by going internationally.
Dewald, for you?
Yeah, so we were lucky in that Nedbank had a relationship with Swisscard in Europe, and so when we had the success with Nedbank in South African market, and with some of the other banks here as well, they recognized the potential and kind of introduced that to Swisscard in Europe, and we were lucky then to deploy that with them and had the same success. They won some awards, for that deployment. And so we started seeing that obviously the same problems. Account takeover is a global problem. It's not just, in South Africa. And so we started kind of seeing that in Europe, we could use the same technology that we built in South Africa and actually sell it in that market as well. And so pretty soon we started seeing some copycats in other markets as well. So it was very easy for us to see where to go as well after that. But that was our way out, was in terms of a customer that had a connection to another market.
Interesting. Stephen, when you think about the markets that you operate in, how did you approach going into markets that may perhaps be seen as mature markets? What was the entry proposition going in there?
So again, because we started our business from scratch, where there was no real third-party infrastructure to provide anything to us. So back in the old days, if you wanted to be in the ATM business or the POS business or anything, quite frankly, offshore, you really only had to do one very small part of it and you could build a big business. You know, maybe if you're in the UK or the US, you just have to find a location and there'd be someone else to provide the installation and the maintenance and the servicing and whatever. In South Africa, because we were ostensibly the first in the market, we had to build the entire value chain ourselves from scratch. So that gave us an enormous understanding at the granular level of all of the costs and all of the drivers. So for example, we rolled out 2,000 ATM machines in Australia. We ran networks in the UK. Why? Because when we went there and we actually saw that some of the incumbents, their granular understanding of the drivers and the costs, quite frankly, were not as good as they could have been because they didn't have to be, number one. Number two, we also looked at markets where we could bring our scale, our South African scale at rand cost, and that made it very difficult for the offshore incumbents to compete with us, because if you can process a transaction from here relative to what people would have to emulating that infrastructure offshore, we can do it at a fraction of the cost. And I suppose two last points. We always saw South Africa as a good core market. You had to be meaningful, but you had to be diverse. We don't have the luxury of being in the US where perhaps you can be, I don't know, the third largest egg farmer in Kentucky and you've got a huge business. In South Africa, you had to go broad to be able to compete. So we found ourselves being in ATMs, in card issuing, in merchant acquiring, and that level of understanding of the broader payments universe stood us in good stead in all the markets that we went into. And the last thought that we had is South Africa is a bit of an enigma. You know, we always talk about South Africa perhaps as developing or, you know, maybe second world. That would be an easy way to describe it. But that's not true. That's not true. South Africa is second world on average. On average, it's second world. South Africa is ultra first world and ultra third world all in one place. I mean, in some of the very sophisticated markets, we've got everything that they've got there. But then again, 4 kilometers over the hill, you're in Alexandra Township. So there's this weird, you know, kind of amalgam of first and third world, which makes us developing on average. That's the first thing. So what we did is we sought out markets which were, let's call it developing or second world, and that pushed us to Eastern Europe. Hungary, Slovakia, Czech, Croatia, Bulgaria. Why? Because those are developing markets. Someone coined it very well the other day. They said they first world with a bit of spice, or maybe third world with a bit of sophistication. And we've really thrived there. We really, really thrived. And that was kind of our market entry strategy.
Okay. Diva, let me come to you. How did you, adapt Entersec's offering to sort of suit the regulatory and the security expectations?
Yes, so that was quite an interesting one because it is so vastly different, you know, across the globe. And so our approach was to look at one that is the strictest and use that as the base to build against. And then, you know, if you've got the strictest one and you comply, then all the others, you know, there's a very good chance, and it was true, that you actually comply with them. So that was our approach, is to kind of just, you know, make it as difficult as possible, you know, build it for that environment, and then actually for the other markets we were actually fine. There was actually one market in Malaysia that actually had a very, very strict regulatory environment. So we used that together with obviously the European regulation, and those two you know, environments were kind of the blueprints that we used to make it kind of scalable for, you know, international markets. And I think the other thing that was kind of interesting about that is you can't certify for a regulatory requirement, and so we were kind of running into that the whole time, where you get the questions. The sales cycle is very difficult because you have to somehow prove that you do comply. So one of the things that was actually quite you know, a good way to get around that was to get a third-party kind of auditor to write an opinion piece, evaluate your technology and then say, yes, they comply for these reasons. And that then opened up a lot of those markets from a regulatory perspective for us.
What's nice is that as you're talking, there are quite a few questions coming in, and we'll get to them in a short bit here.
Oi.
But let me stay with you, Dewald, and then we'll move on to Stephen with the exact same question. So a lot of startups would ordinarily struggle with international expansion, primarily because there's probably resource constraints. As you sit with the team, for both of you, how did you decide which market you want to enter first, but then also how you think about funding that? Let's go with you, Joe.
Sure. It's, I think we kind of looked at markets where there's a compelling event, right? If you're going into a market and you want to go and sell your product, first of all, are you going to is that same problem there? So we would look to make sure that, there is, looking at the maybe fraud reports from that market, there is a problem. But if there's a regulatory compelling event, for example, hey, let's take something like PSD2 in Europe. By a certain date, all the institutions had to actually comply with a certain regulation, which was pretty much right in the core of what we do. Those are then very, good markets for us to kind of go after and make sure that you actually go to that. The trick then becomes to, as you say, okay, how do you fund that? And that becomes quite difficult. There's you can either, based on the opportunity that you kind of build a business case for, say, okay, I'm going to get some growth funding and use that to actually fund my expansion into that market. But that's very risky. And so I think the thing that worked for us much better was we would send some of our best sales guys into that market and see if we can land at least one client remotely.
Okay.
And if you're able to do that, if you're able to prove that you can actually convert a client, then you've got a much better case to actually invest in that market, because now you've got a client in that market that actually also helps fund your expansion into it. And so that's been our approach across the globe, is first make sure you can secure a client there, and then kind of invest more for the resources into that.
Stephen, what was your approach?
Our approach was firstly stay close to home initially,
Okay.
which was South Africa and the surrounds. Similar regulatory environment, let's say, ease of travel, and some similar market dynamics. So that would be almost your dipstick test, and then to the extent that that works, you'd look further afield. So we'll try to stay regional to start off with, and then push out internationally. And we're a partnership-driven business. In most of our businesses that we have around the world, in very few instances are we the sole operator. So we like JVs, we like partnerships, we like strategic alliances. That brings local knowledge, local context, regulatory comfort. So ours is very much a JV partnership driven model, either commercial partnership or equity JV. As far as funding is concerned, we never had the luxury of a massive third-party balance sheet given to us to a private equity firm. We've had private equity involved, but never someone that gave us a big pot of money and said, off you go.
Yeah.
When we first started the business, it was funded by the three Fs, friends, family, and fools. And we've almost, we've bootstrapped it ever since. We invest into the things that we can afford, and fortunately, we've also had very, very good banks that have supported us in our journey. But yeah, it's been self-funded pretty much.
Let's build with that, let's build on it, because often when you think about scaling internationally, it does require a shift when it comes to the culture, your processes, but also team structure. When you think about all of that, how did your internal culture change, if at all, as you expanded?
For me?
Yes.
Firstly, we are privileged as an organization to have a unbelievably talented executive pool. I think there must be, 8 or 9 executives. I think the average tenure there is like 19 years. So these are wartime generals, they're skrik for niks, which is very, very helpful. And we've got a very good, stable South African business, because you can't go off on international adventures if your home base is not stable, number one. Number two, people, startups or just businesses generally that want to scale internationally fall into the trap of deploying their best people to their biggest problems. I don't think that's right. We deploy our best people into the biggest opportunities. So for example, as our business was growing internationally, they said, look, I've had enough of you in South Africa, off you go to the UK, and you go there and build out Europe. So we try and deploy the best people that we can, because that an international scale has to be part of the fabric and the culture of the business, eh? Yeah. And every single business, and we've been very acquisitive over the years, have international relevance. We acquired a company called Tutuka in the past, the card issuing business. They had global aspirations, were relatively global when we got involved, and scaled massively during that time. We bought another business that was regional, that scaled international in Kazang. So I think that what we do is, if either it's an internal move, everything that we do has an international flavor, or if we are acquiring businesses, they need to be internationally relevant. And last but not least is we still try and maintain as much as we possibly can centrally in South Africa. So our partners or our teams, these strike teams that we have overseas, are still very much tied to the South African narrative. And that way we can hopefully get the secret sauce by osmosis, rather than just letting them, float around on their own.
Okay, and Devil, for you?
Yeah, yeah. I think that was a mistake that we made. So I've got some scars on my back where we got it wrong. The first time we tried to go to the US, we appointed someone on that side, like a local person that built a team there, and we didn't have anyone from the like, let's say, the core business who was involved in the day-to-day. And so you kind of built these two competing cultures, and you don't realize it until it's too late, where that becomes a very big problem, where you're spending time like people don't really get along well. So that's something that's actually very, very important. And then as we kind of went into other markets over time, that we spend a lot of time on that. So two things are important. Number one, you have to really have a strong central vision that everyone actually buys into. If you don't have that, what you'll find is, in the void of that strong vision, people try to come up with their own, and then you're going to create some cultural clashes. And the other thing is, if you have to invest in internal kind of marketing and culture building, we brought many of our teams, for example, to South Africa, and we would for onboarding, right, so that they actually saw where it all started and kind of bought into that culture. And so we actually, to this day, make sure that we invest a lot to make sure that culture is actually the same across the organization. Otherwise, you are looking for trouble.
Yeah. Stephen, Devil's got scars on his back based on what he got wrong. What scars do you have along this journey? What did you get wrong?
Oh my God, we fell into every single pothole. We didn't jump over one. We didn't walk around one. Our scars are deep and many. I mean, what did we sort of underestimate as you move?
There's so many. He's trying to think of.
Oh my God, there are so many. I mean, I don't think we got one thing right. Firstly, you underestimate the complexity of the regulatory environment in these new markets. You think, you've got the SARB, and you've got PASA, and you've got PayInc, and everything works together, and there's this interoperability, and you have a certain license or your sponsorship. That wasn't the case. So we thought, we learned a lot on the regulatory side. Boy, we learned a lot on the regulatory side. But actually, that stood us in good stead as we've licensed ourselves. We underestimated the regulatory complexity. Number two, we also thought, consumers are the same everywhere. The products that work here work there. They don't. They're not myopic. They do what suits them. And lastly is that we really misjudged the cultural differences in customer and partner negotiations and deals. We just got it right eventually by getting it wrong so often. But boy, scars, well, could have you all day. No, we have them all.
Okay, I'm going to try and come back to that partnership question a little bit later on, but we've got 13 minutes left to this session, and I see there's quite a lot of audience questions that have come through, so I want to make way for them and try and weave in some of my questions as the conversation unfolds. So the first question comes in, and I'm going to try and pass it around. Stephen, let me stay with you for this one because there's a PayCorp question. What does scalability mean to PayCorp in a world moving rapidly towards cashless, API first, embedded finance ecosystems?
We are not pro-cash, anti-cash, pro-card, anti-card, account to account. We are pro-choice. We will say we will provide a payment service that suits the market and the market desires. So to the extent that people would like to pay via cash, via crypto, via card, via a short-term loan, we have to be in a position to offer payments choice. We're not prescriptive because consumers, people have cards for a long time and they go over and they withdraw the cash, or alternatively they take the cash and they then we are not prescriptive in the way in which we see any particular payment stream. We are choice agnostic. If they want cash, cash card, number one. And scalability means to us is to go into markets and to verticals that we can already use our existing scale. Because to go into a standalone business where you don't have any competitive advantage and you have no scale to bring to it doesn't help our economics. So that's our view.
Yeah, well, there's also a scalability question here that I can direct to you. It says, how do you tailor your scalability strategy in markets with differing levels of financial infrastructure and digital adoption?
Sure. I think what we try to do, first of all, is when we built our infrastructure, right? When we design that, we try to kind of use the cloud infrastructures that you can kind of use in different markets, right? So that you can kind of move relatively easily into markets when there's regulatory requirements that you kind of have to do. So you can replicate something relatively easily. It's not like you have to build from the ground up again. So that's helped us a couple of times where we have to enter new markets or where suddenly there's regulatory change because those also happen where you're in a market and suddenly, oops, curveball, right? And you have to respond. So I think the other thing is also we try to, as far as we can, leverage the same infrastructure globally, right? So we built for global scale as much as possible from one kind of system, which kind of then really kind of helps you to do something at cost that typically you wouldn't be able to do in another market. And so that's helped us a lot as well in terms of achieving that.
Okay. Stephen, there's a PayCorp related question. How did you manage capital and capacity allocation across the broad range of capabilities PayCorp was involved in and be able to remain profitable as a startup?
With difficulty. I think what we've tried to do as best as we possibly can is if we say yes to something, must mean that we say no to something else. And that's constant juggling act of financial capacity, human resource capacity, and technical capacity. And we've become quite efficient at sizing the prize. So, for example, if something comes through the door, an opportunity, an acquisition opportunity or a JV or whatever, it goes through 4 gates in our world. It goes through 4 gates, and it has to tick at least 3 of the 4 gates before we'll pursue it. Firstly, is it a non-cash opportunity? Not that we don't like cash, we like cash, great business, but we do see the pivot away from cash, and that's important to us, number one. Number 2, will it add value to or will it leverage off our ecosystem? So something that's standalone, that doesn't have the benefit of our scale or adding to our scale, we say no to. Number 3, is there a lending opportunity? Because quite frankly, payments are fantastic, but the second that you overlay the credit piece, the ability to lend to that base, it makes it much more interesting. And last but not least, does it have an international flavor? Yeah. Because buying South African assets is great, or starting stuff in South Africa is great, but does it have international relevance? So we have bought businesses here, and we have started businesses here, but everything that we are doing says, well, is it going to be, or does it have the possibility to be internationally relevant? So unless it passes 3 of those 4 gates, we say no to, and it just helps our decision making much, much, much better.
Okay, let me come to you on just his response. What do you say no to and what do you say yes to? What are your...
Yeah, I think that's a very, very important thing, and again, I think there's some scars on the back where we didn't do that, right? Where we try to be everything for everyone, and then basically what happens
That's
is
an entrepreneur.
you spread yourself so thin that you do everything bad, and that's a learning curve, and so I think very similarly we would look at if we're going to do something. Is this a once-off that we're only building for one client, or is this something that we can, reuse and kind of package back into the ecosystem that we can then, leverage that and send that or sell that to other clients in other markets as well. If it's not, then that's typically something we try not to do. So we try not to build once-offs, and we'll also always look at. Does it fit into our ecosystem? Does it strengthen it? And is it scalable and usable and reusable in other markets? And the other thing that we'll look at is if there is something that's maybe a little bit adjacent, so not as clear of a fit, is it something that's strategically important for us? So is that something that maybe is somewhere where we want to go, where we've got ambition to go? So does it fit into the bigger picture for us? And so we're making a jump, and now you're actually having a client that actually helps you go there. That would be the one exception where we would go a little bit further from the core.
Here's a question that perhaps both of you can answer. It says, when scaling internationally, how can South African startups attract global capital without losing strategic sovereignty or becoming subsidiaries of foreign investors? Is that possible? I don't know.
It certainly is.
Okay.
So I think when you look at investment from international like VCs or PE firms, the one thing that they'll all look at is, are you dominant in your own market? Have you shown success in your home market? And so I think that if you look at expansion into other markets, when's the right time? Win in your own market first before you look elsewhere is something that's very, very important. And if you can demonstrate that, and you can demonstrate the fact that you actually, either have a big growth opportunity or that there's an international expansion, so there's relevance for your technology in another market, those are then really good ways to actually get international, investment. And I think it's much easier today. To get investment in South Africa. It was very challenging some time back because there was that loop structure challenge, which has now been resolved. And so investment from foreign companies is now much more, if you have a product that can work.
I'll give some advice to people looking for international investment. Firstly, don't get it too soon.
Okay.
Yes.
Don't sell too soon. Everyone's in a rush to get third-party money in. You need to be on the field. You need to be in it to win it. Don't chase perfection. You can over-engineer and over-engineer and over-engineer. No one makes any money sitting in the stands. You need to be on the field. Get to market as soon as humanly possible and hold on to your equity as long as you possibly can, because invariably the biggest regret that entrepreneurs will have is they sell too early, too cheap. That's the first thing, number one. And number two, probably, I agree with Devalt. Now, it's so much easier. There's a lot of international money sloshing around. Africa's quite topical. It's got a growing population. There's financial inclusion stuff. I mean, when we got going, there was no VC money in Africa. There was exactly it. There were issues with Loop, and you couldn't do this, and you couldn't do that. You couldn't do the next thing. Now there is DFI money. There's sovereign money. There is private equity money. A lot of the banks today have their own balance sheet. They're funding ventures with patient capital. There are a lot of PE firms that like fintech, so the opportunities are endless. Hang on to your equity, get to market ASAP. Rather get it 80% right and get into market than get 100% wrong and still stay in the stands. That's my advice to that.
Yeah.
One thing I'll just say and add to that is, to your point on holding on to it, I think understanding your value, right. Is very important when you go into that. And so, some of the scars.
There's not so many good founders and entrepreneurs, but there's a lot of capital.
I was going to ask you, because given the stories we've just learned here about both of your organizations, your businesses, and how well you've done, yes, you've got scars and mistakes along the way. I can imagine there were sort of bigger organizations that may have been sniffing around you because you're doing the right thing, and perhaps they say, why am I not buying Paycorp? Why am I not buying Intersec? Have you ever had those offers over the years and you've just said, no, not yet, we're not ready to? How have you been approaching those?
Yeah, I don't know. I bought and sold it a few times, so this is, I think, my fourth round. But the truth is, maybe it was during COVID. You
Yes.
have some time for reflection, and then you realize that, you think all entrepreneurs in their mind are serial entrepreneurs. You can do anything. You can make money in bottled water or footwear. The truth is, I really only know payments, and quite frankly, it's a fantastic industry to be in. And if you've got a great asset, and you're working with great people, and you know more or less what you're doing, rather stay in that. And I don't really buy into this thing where people come in immediately, froth it up, put a bit of lipstick on the pig, and then flip it out, because eventually you get found out. And a lot of these businesses they are losing money and they're burning through their investment. From our perspective, we say if we build a great organization that is defendable, geographically diverse, and product diverse, when the time comes, if we want to exit it and monetize it, rather let's do it on our terms.
Okay.
Yeah, and so certainly we've had a couple of companies kind of over the years come, and it's we've looked at that, and certainly the valuations that they put us up, so we were just like, no, that's not, you're completely undervaluing the opportunity. So we've not found anyone that kind of saw the the same vision that we had. I will tell you one of the, again, a scar on the back. Let me share that, right? So we had one very big competitor. We were starting to beat them at a couple of some of their big clients, and so they came under the the illusion of, hey, we're interested to maybe buy you. Let's do some due diligence on you, and they literally just took everything that they learned and went and copied it.
Oh.
And so you also have to be very careful about that. When these big companies come sniffing around, you got to be very careful about what their actual intent is.
Okay. Stephen, there's a Paycorp question here, and it says, if Paycorp had to scale its transaction volume or client base 10 times in the next year, what part of the business or platform would be most at risk, and how are you preparing for that?
We are operating well below capacity. We have plenty capacity.
Okay. And then as we've got about 20 seconds or so, I'm going to direct this one to you, Diavel, perhaps you can answer it. With the fragmented systems, payment systems emerging globally, how's that fragmentation complicating the ability to scale globally?
It does make it quite difficult. I'll be honest. It certainly does. But for me, that's the opportunity, right? If you can find a clever way to kind of make these systems talk to each other, that's the opportunity. So where you see a challenge, that's where I see an opportunity. So it does make it difficult, but certainly it gives you the opportunity to be unique and have real value.
And I'm going to borrow just a few seconds as we close off. What advice would you have for entrepreneurs who are thinking about global scale, particularly as it relates to timing and readiness? Stephen?
I said it before. You don't wait for perfection.
Okay.
Get onto the field as soon as you possibly can, because no one's won the match sitting in the stands. People come see us all the time, and we got this and this and this and this. I said, well, are you in the markets? No, just get into the markets, and you will figure it out later.
I'd say win at home first,
Yeah.
before you spread yourself thin to other markets for expansion.